In this video, I want to share with you my stock watch list, top 5 for January 2020. I'm excited to share this list. It is only a watch list, however, not a buy or recommendation list, just an FYI. If you're new to my channel, my name is Jared Ayers. I am a CFA charter holder. I've been managing my own money for over 20 years and have created this channel to share my ideas, thought processes, and techniques for investing in the markets. So without further ado, let's jump into my top 5 list for January. So before we jump straight into the top 5 list, I want to just quickly run through exactly where I go to find my watch list ideas. I've shown this before in other videos, and I'll link to the more detailed versions of those, but just as a quick review for those who are new to my channel, the 3 main places: stock screening tools. So those are basically available usually through any discount brokerage account that you may have, or there's a few tools out there that are free and pay for use as well. Second place is upcoming or recent stock spin-offs. So stock spin-offs are a great place to find stocks that do really well, often over time. I've cited those as well in previous videos, which I will also link to. PayPal being probably one of the most recent and high profile when they spun off from eBay. So you can check that out as well. And the final place, of course, is just your regular media locations, blogs, articles, interviews. That's usually less fruitful, because once the world kind of knows about it, then it's not quite as secret as the other 2 places. And usually the ideas that come out of those sources aren't as profitable, but still there could be some really good core information that you can pull out from different ideas and potentially find a little diamond in the rough as well. What I found for my top 5 list for January 2020, the first idea that I've come up with is Kforce. So this is staffing and employment services. The idea there being that it will be running off the tailwinds from the low unemployment rate. Of course, if you want, well, certainly when I'm looking at this stock a little bit more closely, if I do decide to enter into the position, I will be, of course, watching that unemployment rate very closely, because as soon as that starts to change, stocks like this may get hit. So just a cautionary point there. This company, also being people intensive, usually has pretty low capital requirements. I'll be looking into that in a little bit more detail as well. But as a result, high return on equity, which is one of my core criteria, high return on assets at 33%, and then earnings yield of 6%, which isn't too bad at all. So that's my first idea in terms of my watch list for January. Second one I've shown before, Coda Octopus Group Inc., niche tech company serving private and public sectors. This more has to do with marine technology, so think of mapping the bottom of the ocean if you're trying to build an offshore oil rig or fix one and you want to see what the bottom of the ocean looks like, or salvage a sunken ship, or build a breakwater. These are all things straight off the company's website that they do. Basically the software and hardware to map and view the bottom of the ocean or any other waterway, I suppose. High return on equity, high return on assets, and 10% earnings yield, which is very good. Strong balance sheet, high cash flow generating ability, and of course they are continuing to reinvest in their own research, which usually leads to new intellectual property and keeps them defending other entrants into the sector. So stock has actually gone down since I last had it on my watch list, so it could be even a better value. Of course, haven't quite pulled the trigger yet. Do want to kind of see if there's some sort of catalyst that will turn it around and send it in the other direction. Probably not as sexy as some other things out there, but worth taking a look at anyway. Some pretty good numbers around it. The third idea or stock on my watch list for January, BellRing Brands. This is actually a spin-off. I didn't find it through my normal spin-off channels. I actually found it through my screens. Nutrition product manufacturer, think of BRBR. They own that brand. Spun off from Post Holdings in October 2019, so pretty fresh. The I guess segment or subsidiary of Post Holdings when it was still in their portfolio was called Active Nutrition. So the financials are basically from the last 3 years, or at least last year anyway. So high ROE, 26%, 21% ROA, 20% earnings yield. Very strong balance sheet, although the new company will be laden with some debt, but it looks like to be not too bad in terms of their high cash flow generating ability. And although they are a manufacturer, they actually have pretty low capital requirements. So that's really driven by the fact that they outsource all of their manufacturing. So that usually leads to pretty high free cash flow because they're not reinvesting in their fixed plant and equipment. So that's a really strong sign. And just the fact that spin-offs often do pretty well in the couple years after they are spun off. This one was actually through an IPO, which sometimes has a little bit of a different effect because institutional investors aren't dumping it if it's a regular type distribution spin-off, but still worth looking into. I'm going to look at it a little bit more closely here and may actually just dip my toe in with a small position just so I can keep tabs on it. But pretty good prospectus, or at least information in there. Take a look. It does list out the risks, which are real, but it's got a few really strong brands in its portfolio and seems to be growing very strong organically as well. So good one to look at as we sort of enter into 2020 here. The fourth one on my list, Questor Technology. I've had this one on there before. It's gone up a little bit since I last had it on my list. Clean air tech company. So think oil and gas, landfill, power generation, kind of anything kind of major industrial that produces potential pollutants into the air. Questor has solutions, varying solutions to address those. So very high ROE, very high ROA, decent earnings yield, very strong balance sheet, so very low debt, high cash flow generating ability. And it is a small company, low market cap, trades on the venture in Canada. So that's one sort of maybe red X against it. If something does go majorly wrong in the greater economy, sometimes the small little companies get hit pretty hard for no good reason, but it's something just to be cautious of if we are entering maybe a slowing time here. But still a really solid looking company and something I'm going to continue to watch and potentially make a move if the value warrants it, if the price kind of takes a big dip here. So another one for the list. So my fifth one is Intuit Inc. Some may recognize QuickBooks software, accounting software. I'm an accountant as well, so I'm pretty familiar with this company. 49% ROE, 28% ROA. Should provide decent protection in a recessionary environment. Companies still have to do their books no matter whether they're producing strong bottom lines or not. So from that perspective, they've got a pretty good cloud solution, kind of a system where they're producing recurring revenues, subscription based. So that's always good. High cash flow generating ability, of course, and low capital requirements because after all, it is just software. They do constantly innovate though, from my personal experience with them. So that's always a good sign. And yeah, so those are basically my top 5 stock watch lists, ideas for 2020. Again, not recommendations, not positions I'm necessarily entering into, but definitely curious to continue watching, as at least on the surface they have some pretty strong fundamentals and pretty good numbers in terms of the screening criteria that I look at on a regular basis. So I hope that was useful for you. So that is my top 5 stock watch list for January 2020. It's always good to see that there are always still opportunities out there. I know when markets are creeping higher as they have been, it begins to seem like there are no opportunities still around. But lo and behold, I often find that there's still little nooks and crannies to find ideas like the ones I've just shared today. So, as my indicators have shown, the economy may not be getting as bad as fast as I initially thought earlier in 2019. So maybe looking to add a couple of these positions to my portfolio here in kind of the early part of 2020. I can always let you know, of course, if you're interested. Shoot me a note in the comments, and I can share those as well. If you did like the video, do hit me with a thumbs up, and if you have not been a subscriber so far but would like to see similar content in the future, then by all means hit the subscribe button. And any other comments or questions you have, of course, hit me up in the comments as well. Until next time, thank you very much for watching.